Hey everyone, welcome back to Corporate Decoder. Today, DLR just filed an 8K highlighting some big acquisition and investment news, and I am seeing a clear strategy to expand their data center footprint. Quick note, this is not financial advice, just my take on public filings for educational purposes. Digital Realty is snapping up more of key joint ventures, signaling a push to fully control crucial data center assets. So this Form 8K is essentially a current report that companies file with the SEC to announce major events that shareholders should know about. Think of it as a really fast news update from the company, Digital Realty Trust Inc. and its operating partnership. Digital Realty Trust LP have put out some significant news. The biggest piece of news here is about their Teraco joint venture. Digital Realty is buying an additional 16% of this venture. Now, Teraco is a really important player in Africa for data centers. By increasing their stake from what was likely around 61 to 77%, Digital Realty is cementing its control over this key region. They are paying for this with over 3.4 million shares of their own stock. This move shows they believe strongly in the future growth of Teraco and want to fully capture those benefits. This repurchase is expected to wrap up in the latter half of 2026. They are also making a move to acquire Columbia Capital. This company is focused on the communications, technology, and digital infrastructure space. Digital Realty is paying an initial amount of $45 million in cash and also giving over 2.3 million shares of their own common stock. On top of that, there is a potential for another $290 million in cash or stock. Depending on how certain performance targets are met, this deal is also set to close in the second half of 2026. Acquiring Columbia Capital, which manages over $9 billion in fund commitments, looks like a strategic move to tap into expertise and relationships within the digital infrastructure ecosystem. The stock they are issuing is subject to a lockup period, meaning the sellers can't sell it all at once, which is a good sign of a more staggered integration. Before these bigger deals, back in April, Digital Realty's operating partnership bought a huge piece of land, about 1,440 acres near Kansas City. This is for developing new data center space. They paid a significant sum for this, around $377.6 million in cash, and also gave out over 500,000 partnership units. This shows they are not just acquiring existing assets, but also gearing up for major, long-term development projects. Looking at how Digital Realty stock is traded, their common stock, ticker symbol DLR, is on the New York Stock Exchange. They also have preferred stocks registered under names like DLR-PRJ, DLR-PRK, and DLR-PRL, also on the NYSE. This filing confirms these are the main securities traded by the public. Regarding the equity issued for these deals, the filings indicate that these issuances are exempt from registration under the Securities Act. This typically means they are structured as private placements or transactions not involving a public offering. For the Columbia Capital deal, they are issuing shares that are subject to resale registration rights, meaning the sellers will eventually be able to sell them into the public market. This is standard practice for these types of transactions. Now, like most corporate filings, there is a cautionary statement about forward-looking statements. This is basically a disclaimer that anything they say about the future might not actually happen. They mention risks related to market conditions, closing these specific transactions, and broad legislative or regulatory changes. It is really important to remember that these deals are not guaranteed to go through, or if they do, they might not be exactly as described. They also point to their annual and quarterly reports for a more detailed look at all the risks involved. They are very clear that they are not promising to update these statements if things change. The company also included a press release and an investor presentation as exhibits to this filing, which are designed to provide a clearer picture of these announcements to the public and potential investors. These documents will likely contain more detailed explanations and perhaps some positive spin on these strategic moves. So, what is the story here? Digital Realty is aggressively expanding its reach in the data center industry. They are increasing their ownership in key international assets like Teraco and making strategic acquisitions like Columbia Capital, while also securing large land parcels for future development. This is all happening with a mix of cash operating partnership units and their own stock. The recent news about AI opportunities and earnings growth from Yahoo Finance aligns with this expansion, as more data centers are needed to power AI and other digital services. My biggest concern, or rather something to watch closely, is the dilution from issuing so much stock. While it is a way to fund growth without taking on more debt, it does mean existing shareholders own a smaller piece of the pie. For instance, issuing 3.4 million shares for Teraco and another 2.3 million for Columbia Capital is a significant number of new shares. We will need to see how the earnings growth keeps pace with this dilution. On the flip side, The aggressive expansion into critical markets like Africa and the focus on infrastructure for AI are strong potential growth drivers. They are clearly positioning themselves for the future of digital infrastructure. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.